Welcome to Potential Show. This is a show where we sit down with founders and investors to talk about their stories and secrets to succeed in the international startup world and make an impact on society. Welcome back to the Potential Show. This is the second half of our interview with Jordan, co-founder and CEO of Zehitomo. Check out the first half to hear him talk about his career transition from VP at JP Morgan to founding Zehitomo and its business model. Link is in the description box below. In this episode, he will talk about fundraising from top-tier VCs such as Coral Capital, the former 500 Startups Japan, and integrating AI to further grow his business. So, without further ado, please enjoy this episode.
I see. And you also mentioned that in the beginning you were bootstrapping, and then you decided to get the funding from 500, and also I think that time Draper Nexus Ventures, right? What was the decision, the trigger there? Did you feel that, I need this money from venture capital to grow more aggressively, or?
It was very clear that when we're bootstrapping and we're hiring people, right? Just talking about not the company burn, but it's just your personal net burn, right? And
sure.
It was very clear we
true.
had to make a decision. We either go slowly, right? And we continue to bootstrap, maybe while doing some other work part-time, or we need to go all in and we need to move that much faster. And even if it means that we just, not to be too cliche, but fail faster or kind of learn a lesson faster, we're going to be able to iterate that much faster, and we're able to solve this problem that much faster eventually by fundraising. And so, so I think it was a pretty straightforward decision at that time. And we were fortunate enough to kind of have the backers that have joined us to date, that have kind of given us this opportunity. And as I mentioned earlier, it hasn't been an early journey getting here. We kind of had a different figure we're doing on both the demand and the supply side, but we're really fortunate to have learned all the lessons that we have along the way. And if I can, I've learned a lot from other more experienced founders than myself, all the time. And so I know I really enjoy, and I'm happy with the podcast that you're running as well, and it's a way that I'm able to give back to.
Thank you. And so talking about the lead investor, who was the lead investor for the round? So you had a seed in the 2017, and then you had a Series A in 2018, and then you had recently in June 2020, you had a Series B funded, right? Was it always the 500 Startup Japan or Coral Capital that was within the deal, or did they change?
So our seed and Series A was led by 500 Startups at the time, now Coral Capital. And our recent Series B was led by Digital Garage.
Digital Garage. Okay. I see.
Yeah.
Why did you choose them?
They have been, so I've gotten to know the Japan team quite well, and was able to build, a really strong trust. But also I feel like they really understand marketplaces in Japan, which, in Japan, a lot of people love SaaS, right? But the reason that
there's a hype now, I guess. Yeah.
But, when we talk to investors in California, a lot of them love marketplaces because it's like SaaS with network effects, right? It's it's the, and I think it requires more investment up front to kind of reach that point. But the rewards are that much larger. And Digital Garage, they had their offices as well in New York. I actually met with the founder in New York. So I think they kind of shared some of the cultural elements in terms of, understanding New York, Silicon Valley, and Japan, but also understanding marketplaces in Japan, and kind of advice from more of a business side as opposed to just kind of an organizational growth side. That, and also I think we're kind of at a stage where 500 is an early stage investor, and Digital Garage is more of kind of a kind of mid stage investor, and so it was also kind of appropriate timing. In terms of, for us, if we are going to, fundraise, we want people that are going to have capital to be able to do follow on and to be able to kind of invest in our future. So
I see. And so your investment was from the latest funding in June 2020 was Series B, and you got capital from Coral Capital, SMBC Ventures, Mizuho Capital, DG, and then Mitsubishi Estate and more, I guess. what's your criteria for choosing investors?
Yeah. So most of the places that you just mentioned right now were existing investors, right? So those are all the
Okay.
investors that came in during our Series A, Mizuho and
I see.
So those are more, as kind of continued follow-on support.
I see.
For what we're doing. But the new larger investors that we kind of introduced in the announcement, first in Digital Garage, Dawa Ventures, leading our round, then Kanki Energy, Toshi. So they've also invested in a handful of other kind of marketplaces and understand the local space as well. And the Mitsubishi G Show as well as kind of a really strong partner for us as we build out. Well, some of the others.
So some founders say that they want to get just a capital, so they know what they're doing. They just want to get a capital from investors, so they kind of want to have some silent investors. But some others say they want to get some hands-on support from the investors, and this may actually change depending on the stage you're at, right? What do you think about this? So, do you think you want to get some hands-on investors from the very beginning, or you want to get maybe from Series A, or?
So I think hands-on or off is more a function of what you need to grow the business as fast as you can. And I think if you only need capital, then you don't necessarily raise from VC, right? At least in Japan, you could, right? And maybe that's still the fastest way to get the most capital. But the way that I frame it in my mind, and from our very early days as well, is that, okay, if I'm going to give, let's say, investor A 10% of the company, is the company going to grow 10% faster, right? Even if they don't give us any capital.
Sure.
Right? They give us no money and we just give them 10% equity or 5% or whatever the percentage is. Are we going to grow that much faster? And if we are, then we want to be doing business with them, right? If and then we're able to get the capital on top of that, right? It's kind of icing on the cake. And so if you think that
okay, is that a criteria that you use for a consultant too, right? When you hire a consultant, you don't see the money that they're gonna give to you, but you basically see the service they provide to you. So do you think it's similar when you choose a VC?
Yeah, I mean it's a bit, and I think it's a little bit different. You're talking about kind of hiring somebody to perform a service. So obviously you always want somebody to be able to. I guess you could say it's the same in the sense that you need somebody to perform what is the value of that function. Right. Sure. And and I think that comes down to what the that needs. If it's only money and get out of my way and everything's fine, then see if you can do debt finance, right? See if you can raise from corporates are less price sensitive and investors, right, that are happy to kind of taking a backseat like that. But if you want people who are going to help be your partner, the way I see it is that becoming a shareholder isn't something easily undone, right? Because you agree to buy it back with some other capital that you're putting in. So it's, hiring an employee is probably one of the most important decisions that you make as a company, right? It's the people that you're bringing onto the team, right? You're building the future together. But, that said, over time, not everybody in the company can stay. People can decide it's not the right path and you can take different paths. With investors, that doesn't happen. It's not like, we decided it's no longer a good fit. We're now going to go take different routes.
It's very difficult to have a divorce. Yeah, sure.
Yeah. And so we really want to make sure that it's people that can share our vision and help us get there that much faster. And whatever that help entails, that may mean, the capital backing is helpful as well, but, supporting us through the different challenges that we're going to need to face over the next several years.
I see. And Zehitomo, I think, is a great company. Hearing how you speak to me and, your thought process, I feel like, it's a great company. So I feel that you get a lot of offers from VCs in Japan or outside of Japan. Did you say a lot of no's to them?
I'd say fundraising is never easy. At least it hasn't been for us. And so, we've been really fortunate to, have the opportunity to work with, a lot of really top tier investors in Japan. And we love our, all of our investors and shareholders that have kind of taken a chance on us. But it's less around saying we have all these offers on the table. What are we going to do? It's more about kind of the dating process, right? And the marriage and kind of understanding, is it the right fit? For each of you. And so, I mean, there's a lot of rejection that happens for us as well, right? There's a lot of, we thought this could be a good fit. And so, you have to be kind of very mentally strong during that.
But how did you see they are the good fit, right? There are a lot of tools too, right? Like Crunchbase or a lot of articles that write about those venture capital firms, or maybe you can talk to someone, that's the portfolio companies of those VCs. How did you actually understand they're actually the right fit for your company and you can actually trust them? I think this is a very difficult thing,
Yeah.
and it's a CEO's job, I guess.
Yeah. Yeah. So I guess at the very beginning, we had a lot of influence from 500, obviously, because they had, they introduced us to almost all the investors at the beginning, right?
Oh, really? Okay.
Yeah.
Okay.
And that was, one of the value adds, right? We were able to go off and kind of raise the rest of our seed round, our Series A, because 500 was leading, and they're saying, hey, like we have trust there, and they can kind of introduce us to a lot of other different places that they think can be a fit. And so one is obviously their take, right? Or whoever's introducing us. And now we have more investors, so I can ask more investors kind of, what's your experience working with these other different investors to understand their values? The other is, as you mentioned, I talked to other CEOs that, had the same investors, right?
I see.
And a lot of people talk to each other and try to understand, like, how people behave in different situations. And then, but the last and most important is just the own conversations that I'd have with them, right? And so I think those are more kind of like, if you hire, somebody for management, they could come with great references and you can do a background checks and it'd be all okay.
Sure.
But at the end of the day, are you going to get along with them? And you feel that you can kind of build the future together.
But Jordan, wasn't it difficult for this time because of the COVID? You had the new investor DG Daiwa, right? And other investors were, the same existing investor from the last round. So you already knew the persons, that's going to be invested in you. How did you actually get the deals? Did you actually meet them, or how did it happen?
Yes, I mean, we had been, I've known them from last year, right?
Okay, I see.
So, like, we've had a relationship and we've kind of been talking about timing. And so part of my job is to understand, when is going to be like a good time to approach for what type of funding.
I see.
So we had already kind of been having those conversations, and then they were ready to lead. And then Corona happened, right?
Yeah.
And then we had to kind of, change and adjust our plans a little bit. But we still thought it was important to fundraise and close what we could without waiting for things to settle down.
I see.
We wanted to make sure that we could, protect our company, right? No matter what happens.
Yeah.
Pipeline. So they were, super supportive through that entire process. The other new investors that joined this round, I had met them for the first time before Corona, but like doing the Kushinkai, or like the committee on Zoom for the first time, right? With other different investors that have only ever made decisions face-to-face before. It was a lot of new things, right? And I think
sure.
Came on this round that we're able to kind of take a chance on us, and we're able to recognize that, like, things are different, but this is, the future that we want to invest in, and being very kind of strong in those beliefs. So I hope that we can give them the best possible return.
Right. Yeah, I understand. It's a very critical decision. Also, you need to get the funding to survive, and also pay money to your employees, right? And I want to ask this. So, did you actually have to decrease the value of your company because of the COVID and the difficulty of fundraising, or?
No, I mean, we've been consistently growing the company and the organization, but it's like, it's not like, oh wow, yes, we're doing things at unicorn and rainbow, valuation and crazy stuff. Like, we're pretty realistic, but it goes back to my thinking what I was sharing earlier, in that like, we're not looking to investors purely just for cash. Obviously that helps a lot. The later,
sure.
We need cash as ammunition. But we're looking for, investors as shareholders, right? To help build the company together, and allies. And so, if you're thinking, and from the very beginning as well, if we're worried about, we're going to be diluted X percentage, or like we can get a better deal somewhere else, then we probably would have taken very different investors. But from our side, hey, if like, I'm very happy to give investor A or B 5 or 10% of the company because they're going to help us grow faster. If that's the mentality, then great. Whatever valuation they give us for any amount of money, that's great, right? Like, well, that's just extra at that point,
right?
And so I haven't been, we don't care as much about valuation as we do about solving the problem of what we built up the company to do. And I think, if we can negotiate better terms, then we can grow the company faster. That's better, but it's not worth choosing different investors.
I see.
To have different terms. That's only worth it. The only thing we need is cash.
Got it. I see. And then talking about investors, would you say there are some types of investors that you actually want to avoid? Not because they're a bad investor that's gonna, steal your information or something like that, or value at a wrong valuation, but maybe like conflict of interest, or any other criteria that you use to kind of avoid the bad influence on your company.
Yeah. Yeah, I'm not too worried. I mean, it depends on what type of conflict of interest would be, but investing in startups in the same space, that's great, right? Like our challenge, how do we bring this market online?
I see.
We have, as long as maybe it's not exactly like a pure clone.
Sure.
I mean, I think the main thing I would try to avoid for us is, and I don't think we really get this with, VCs so much because they have, 10-year funds and whatnot, but we're not looking for short-term quick exit return, right?
Okay.
We're looking for people who are committed for the big win. And we have a very aggressive plan to build out and grow the organization. And if we're successful, that should deliver, amazing returns for investors. But we don't want to optimize like prematurely for an exit. We want to optimize for solving the problem. And we think that doing so will allow us to build the best and the biggest company.
I see.
And give the best return. But the order of operations is quite different there. And so to give an example in Japan, like traditionally, especially at our stage, it's like, oh, okay, right. So like next stage is like, IPO, whatever your IPO plans, whatever things. And it's very straight up, like, I don't care about IPO, right?
And interesting.
Like we may IPO. It's a very likely, route that we would take as a form of liquidation. But like the goal is not to IPO. And I think traditionally in Japan, a lot of startups and a lot of investors traditionally have been grooming startups for IPOs, right? Building this IPO machine, figuring out how to do it. But when the goal becomes to IPO, then you're optimizing for something that's different than solving your main problem and scaling as fast as possible. So if the fastest way for us to grow and the best way for us to fundraise is going to be to IPO, then we do it, right? But it's
I see.
And it's not a goal or something that we strive for.
I see. But so it seems like hearing what you're saying right now, there's no plan for very like soon IPO for Zehitomo.
I don't care. Like,
I see.
We don't have like, this is the date and we have to do it by then. We have company milestones and business objectives, and we want to grow as fast as possible to solve the problem in Japan as fast as possible.
I see.
Our business to all the small businesses and freelancers around Japan as fast as possible. And if the fastest way to do that means that we should go public and build trust and raise funds, then we'll do that at that time. But that's rushing to kind of do a small IPO is going to I don't see that as the fastest way for us to solve our problem.
What's the bad point about going public at a small valuation? So I think the typical kind of a startup, maybe not right now, but I think maybe like 5 years ago, is that you get some amount of money from the angel investors first, and then you get some amount of money from VCs. Maybe Series A, VC, and then maybe at Series D you don't actually have a VC that can put money there. Or you may, have an investor actually rushing you to actually go public, and then you go public around 100 mil to, $200 million, going at the Mazars, a stock exchange in Japan. And the issue that people all talk is that, there's not a lot of growth potential with Japanese ventures because they go public at 200 and then they kind of, go around there. Do you see that issue in Japan and you don't want to be that? Is that the thing you were saying right now?
The biggest thing that we've learned the last few years doing Zehitomo is focus, right?
Focus.
We have to focus on only the thing to 10x. And anything else that we're spending time or energy on is distracting us from our primary focus, and it is hence hindering our growth. And so undergoing the IPO process requires a lot of time and energy.
That is true.
It requires building in a lot of compliance and structure that is, honestly, a lot of it may be kind of counterintuitive or counterproductive to how we our current values, right? And valuing the kind of creativity and the freedom and the problem solving that we need in order to kind of grow 10x each year. The idea of setting very strict kind of targets for our revenue and making sure that we hit it within a very thin threshold. To us, that's like the values don't align with what we're doing right now. In 2 years, it may make sense, right? Or in X years, like it may make sense like next week. It may make sense in, many years. It like just right now for us to grow at the fastest possible clip, it seems to be more of a distraction than a value add. And you're right. Yeah. The majority of companies that join Mothers are down year on year. Right. And don't grow because the goal becomes to be the exit, becomes the IPO. And so there are good things.
Jordan, I agree with you on like, having a focus is a very important thing. I think that's really the very important thing for startup. But at the same time, what I've kind of felt looking at a lot of Japanese companies here, they go public not only for financial return, but also for trust, right? And I think you kind of realize that doing business in here, especially if you're doing like marketplace, like Mercari, or if you're providing B2B business here, going public, because you have to go through that compliance process, you can get enormous amount of trust. And I think this is a very unique thing in Japan. So, for example, Wanted, I think they went public around $200 million. It's a human introduction recruiting company, and it was very important for them to have that kind of legitimacy from the market and also from the stock exchange. For Zehitomo, because it's mass consumer marketplace, wouldn't you think like going public in Japan would give more like legitimacy to you? Or are you not actually thinking of going public in Japan, maybe other markets?
We'll cross that bridge when we come to it, right? I think it's like building trust and building legitimacy. If that's what we're solving for, that's a very important thing to solve for, right? Especially in a marketplace, trust is kind of the foundation of what we do, and how we bring transparency there. But is the fastest way for us to build that trust to go public? I don't know, right? And if we could have 10 times the number of reviews on our platform, or we could go public, I would take 10 times the number of reviews, right? We could have 10 times the number of professionals signed up, so we have more transparency and awareness. I would take that. If we could have 10 times, more amount of demand that we're kind of, consumers that were connecting to the professionals, I would take that. I would take 10x most things over going public right now. And if going public was the fastest way to achieve that 10x, but I think right now having more actual business on the platform for the professionals is going to create trust, because there's more business they can connect with. For the for the consumers, having more professionals and having more reviews and having more of that information is a faster way to build trust. And I think in Japan traditionally, oh yes, like we're a listed company, hence you can trust us. I think it's actually becoming less relevant over time. I think we can build trust by saying, hey, we have great investors. We have Mizuho and SMBC. We have very trustworthy brands that have joined us. Or if the company does nationwide TV commercials, or does a small IPO that no one's ever heard of, right? Like we can build like more kind of trust and credibility. So I think to me it's like a nice to have part of going public.
I see. Interesting. Okay. But that also means that you have venture capital firm that understand your growth story and that can bear with maybe like later exit.
Either way, yeah, we have a fiscal responsibility to provide liquidity, right?
Absolutely.
For investors, for our employees, all of our employees, on equity, and obviously we want that to be the best possible, event for everybody. That's many like IPO is not the only way to do that. M&A is not the only way to do that, right? We can do later stage financing. We can open up other different kind of pools for buybacks. We can do a lot of different things to allow people to start to have liquidity and to meet our kind of responsibilities. But if we're focused on growth, I think that's the best way that we can actually meet those meet those responsibilities and expectations from investors and give the actual best possible return.
I see.
By growing.
Okay, interesting. So I only have a few questions left, but another question that I have is, I think some of the companies that invested in you, some of the VCs that invest in you are corporate venture capital, right? So they are attached to some of the companies, and then I think until the 2019, there was this kind of hype and trend of having corporate venture capital and then invest in startup. So you can kind of get closer to them, but also get some financial return from them. But also some people say that some of the CVCs are poorly managed, or you may get some issues if you get investment from them because they're not really experienced in investing, and you may get too much of valuation, and on the next round you may not be able to actually get a good deal. Do you see those issues, and did you try to avoid that? What's your thought on those CVCs?
I think it goes back to what I was saying earlier, right? Like, what are you looking for in the investment, right?
Sure.
If you're just looking for cash, then right, and you think you can negotiate better terms, and that's good and that's fine. But if what value are you looking for? And I think that, if you're looking for kind of would you want to do business with that company regardless of if they put money in or not, right?
Sure.
Would you want them as a shareholder? And if not, then just recognize what you're trying to do, right? And that you're just looking for kind of, capital funding. And I think that most partnerships where you don't actually want the partnership, you want the fundraise, generally don't work out as well, right?
I see.
And so if you go for the value of doing business together with them, and different are different, right? Some we actually have formal synergy. Others, it's more just hey, we see the same future together, right? And maybe even if we don't have synergies right now, we can kind of imagine that we're going in this direction. There's a lot of good reasons to do things, but just don't fool yourself on what those reasons are.
I see. Okay. But have you actually got any investment from American VCs or, non-Japanese VCs?
Yeah. I mean, Social Starts was one of the early stage investors. They're one of the most active kind of seed stage investors in the States. It was in California as well, that invested. Okay. And a lot of our early stage, 500 Startups and Draper Nexus were both kind of between Tokyo and Silicon Valley, right?
I see.
As well as kind of angels and whatnot. Yeah.
Okay. And so I want to talk a little bit more about COVID-19, what we are kind of facing right now. And this is actually the last question, but how did it affect, Zehitomo's business? Did your, users drop, or did you have any issues? It's a local service, right? So I feel like you had some, issue maybe because of COVID.
Yeah. Yes, it was really interesting because we could see a lot of different trends moving quite quickly, right? We could see, consumer behavior in terms of, hey, we're spending a lot of time at home. We actually need more home improvement. But maybe less event services, right? The needs for DJs and MCs, greatly decreased. And so I think it was a really hard time for a lot of people, right? It still continues to be. And within the local services scene, for professionals as well, it was hard. As I mentioned, their biggest challenge for small, medium-sized businesses in Japan has been growing their business. And now all of a sudden they're kind of facing, they had the tax hike last year, now a bigger kind of crunch in terms of demand in the market, but it really varied based on the kind of vertical in the category. And on the supply side, however, we saw, it was actually a lot of professionals were saying, hey, we always know that we needed to come online, but we haven't had the tools or the resources or know how to do so. And so we actually found that it's been helping, I think globally it's been, digital transformation, right? It's been accelerating a lot of what might have taken, many years into a short amount of time. And so we see that as well. Our biggest challenge is bringing the market online, right? We can have the best matching algorithm. We can have, this great idea and concept and organization. But if we don't have, plumbers coming off of fax machines and coming online, grow their business faster, we're not going to have the data. We're not going to have that. So
I see.
It helped from that side. And the biggest pain point in the end was really just on fundraising, right? It hit us right in the middle of it. And it made it hard because there were a lot of partners, people that we might have wanted to do fundraising with, but just there was all of a sudden a lot of uncertainty, right? There's, investors that all of a sudden saying hey, we like the conversation, but our portfolio is blowing up. We need to focus on this months and kind of see what things are. And we made the call, not to wait until things settle over. Kind of, buy ourselves the time that we need, so whatever happens in the next couple of years, that would be okay. And we were fortunate enough to, again, have the investors, with us, that were committed to it. Actually, I was going to say despite the time that we're in, but actually almost because of it, right? Recognizing that this is the time to invest, this is the time to build, and this is where we can add so much value to a sector that has so much potential, especially for Japan.
Right. Also, I also feel like people are kind of getting used to using technology because of the COVID, right? Because you have to kind of avoid human interaction. Even people that was considered as a person that don't want to interact with a lot of technology, like people in 50s, 60s, 70s, they are actually using more technologies now because of COVID. So that may actually accelerate your growth.
100%. I think it's been it's been a very serious period, right? And a lot of people have undergone a lot of kind of misfortune from many different perspectives. But looking back on this period, I think just overall across the world, we're accelerating so much. in terms of, becoming a better, the future world that we need to, from so many different angles. And again, there's been a lot of, pain during this period, but I think, we can't, change or undo the pain that's happened, but I think we can, use that to kind of move forward, and, bring ourselves that much closer to the future that we want today. And I think it's never been a better time to kind of, start a company and to take risks, because consumer behavior is changing during this period. We're going through a lot of uncertainty, but there's always that much more opportunity on the flip side of adversity, right? And,
so sorry, go ahead.
Yeah, no. So I just think like now's an amazing time to capitalize on that, and it's that much harder to get funding, sure, but if you're in a position to do something, it's the world is that much better off.
So your 10x maybe just right a corner, maybe in 5 years, 4 years, 3 years, I don't know, but it's going to be really soon. Okay, Jordan, I kept you for an hour. I know you're a very busy CEO, but I'm really glad that to hear that you were able to close your funding recently, and your platform is actually growing. So, and I think our audience learned a lot from your lessons. Thank you so much, Jordan, for being here.
Awesome. Thank you for having me. And thank you.
All right. Thank you.